Suits by Skoda, only on Bloomberg Quint.
Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our guests on the show. Joining us today are Ritesh, Ashar of KIFS Trade Capital, Umesh, Mehta of Samco Securities, and Shahina, Mukadam, who is an independent market expert. Thank you to all of my guests for joining me. Today on the show, we will talk about the results for Titan. Probably was it an operational miss, but the commentary was rather strong. We asked our analysts what they believe was the verdict as far as Titan is concerned. We talk about the banks. Some of the smaller private banks have managed to actually do well and give strong results. We'll talk about what they believe, whether it makes sense to go in for the smaller private sector banks compared to the larger banks. Z has been in the eye of the storm over the past few days. Should one accumulate Z at these levels, or is there more pain, or is the last round of selling over for Z? And lastly, we discuss about one company whose earnings surprised our guests in the fourth quarter. But let's start with the first one, and that is Titan. Came out with a decent set of numbers. The jewelry business did well. The others were mixed, but the commentary that the management gave was rather strong on the jewelry division. It's trading flat in today's trade, but what's the way ahead? So Umesh, I'll start with you. Titan, what did you make of the numbers? What have you advised your clients?
I think Titan is great and it will continue to be great because the size of opportunity and the way they have planned out their growth and they have executed well post GST scenario. I think this is a secular multi-bagger stock, although valuations will be challenging and that will keep off people from investing in such stock. But I think even a part of it was also sold by Rakesh. But I think from a long-term investment point of view, I think this stock has got phenomenal potential. Although its stock is trading at around 60-65 odd PE multiple, but the way they have grown other three segments, which are less than 20% currently, but I think watches segment, which everyone thought that watches are dying because of smart watches, they have managed to grow that. Wearables there, and I think the store format, if you ground level, if you go there and check, I think they have done a phenomenal job, and I think they will grow their business. The franchise is getting bigger and bigger, and they are creating a formidable moat. So I think Titan numbers are great, although at every dips one should accumulate, but those who have should keep on holding for next 10 years. I think that's the kind of wealth they will create.
Okay, so buy on dips is the strategy. Buy at every level is something that Umesh is talking about. Shahina, would you agree? Titan is a buy at every opportunity, or do you believe valuations will catch up?
I think it definitely offers opportunity to buy if the stock corrects. I think it is one of the performing stocks that has given you a decent return in the last 1 year compared to the rest of the companies. I personally used to hold it. I have recently booked out. The reason being that yes, the growth is expected to be there. Market share increase is going to come. There is tremendous opportunity that's available with the change in government policies, GST, etc. But if you actually look at it in terms of core numbers, I think the growth is slowing down. What we saw in the last fourth quarter, while of course the top line definitely met expectations, but the guidance of 20% is slightly lower than what we are used to seeing in terms of top line. Secondly, there is a margin disappointment that we are seeing, and while there is a one-off which is not likely to recur, but I do think that valuations, considering all these factors, are very expensive. If you look at current numbers, FY19, you have a 5 times plus EV to turnover. It is more than 70 times EV to EBITDA. P is of course very high. Even if you look 1 year forward, P is more than 50 times. So to that extent, I think one really needs to look at a deep correction of about 15 to 20% to look to re-enter to make decent amount and to outperform the overall market in the next 1 year. So I would still be a neutral, but I would look at deep cuts before I re-enter.
Okay, that's the strategy that Shahina is saying. Ritesh, what are you betting on Titan? What have you told your clients?
My bet will be on the accumulation. If you look at overall performance of quarter 4, in terms of revenue, it is almost growing by 19%, which is quite decent and at par within market expectation. Only the disappointment part is the margin has been slower down. That is fine. It's not something which is cause of concern. concerned, if you look at it, overall performance in terms of jewelry business, it is contributed almost 80% of the total company portfolio. And in terms of growth, it is almost growing by 21% in terms of jewelry set of business. And in India, jewelry business is going to be in prominent, and it is in the growth territory. In spite of GST and other sort of challenges, in spite of that, company is able to give the growth on the jewelry business by 21%, which is a fantabulous. So I personally feel Titan, in terms of long-term story perspective, it is in accumulation stage. Right now, the market is in the negative sentimental. So whenever you get a chance at the deeper price, definitely you can accumulate this stock.
Okay, so I think the consensus view on Titan is accumulate this counter on every dip and hold it for the long term. That's the view coming in. But obviously, our guest also believes that valuations are a tad expensive for Titan at this point of time. The other interesting thing that we saw was the smaller private sector banks have started to do well. If you take a look at the numbers from something like a DCB or a Federal Bank, they managed to do extremely well. While most of the private sector, largest private sector banks, except for an IndusInd Bank, are out this time around. So we get a fair sense of what exactly is happening on the private sector front. Shahina, does it make sense for anyone, if someone wants to take a bet on the private sector banking space, given the numbers that you've seen, does it make sense to go in for the smaller banks or stick to the the Kotaks and the HDFCs?
I think one needs to have a mix between the large cap and all private sector.
No PSU.
No PSU. Even SBI khich ke okay. But otherwise, private sector. And I think there has to be a mix between the large and the small, because in the large you definitely have the retail space that is being captured by the HDFCs and ICICI banks, which I think is the fast growing and gives you an edge. But some of the smaller banks have reported very good numbers. Like, for example, Federal Bank recently reported good numbers. My personal pick, which I also continue holding from a very long time, is DCB Bank. What I like about it is the way they have expanded in terms of the retail reach. They focus on the small ticket items, and the way their branches are spread is in Maharashtra, Gujarat. So I like the way they have spread their branches. They're expanding on that front. They have cleaned up their balance sheet a couple of years back, and they are maintaining decent numbers, both in terms of asset quality as well as in terms of growth. While the loan growth has moderated a bit, I do think that is in line with the overall market. And given the problems that the NBFCs are facing, I think DCB is well positioned to capture greater market share in some of the smaller regions. Also, considering the way it is positioned, I think it makes a very good M&A candidate, if at all. So, all in all, I think one should be investing in DCB and hold it for a medium to longer term.
Okay, DCB is something. Umesh, what sense did you get after seeing all these numbers? Private sector banks, larger ones vis-a-vis smaller ones?
So technology is a differentiator, So now people are getting loans in 5 minutes because of technology. So because of that, high teens growth around 20% is given. So even larger and smaller banks, private sector banks are growing, and in a way even PSUs have also started to catch up. So I think growth is not a problem. So then if one needs to do a tactical allocation, if one needs to get a higher return on the investment, I think, as she pointed out, banks like DCB or RBL, who are relatively smaller but have got faster speed in terms of growth, in terms of the aggressive expansion. So from a long term, from 2-3 year perspective, I think one needs to have this kind of banks, RBL, DCB. But from a secular point of view, passive investing, then I think HDFC banks and Kotaks are the kinds of banks. So one needs to be aware of what is the purpose and how they want to allocate their capital. For a faster return from 2 to 3 year point of view, I think RBL and DCB are great. Even Bandhan Bank. And from a long passive investing point of view, I think HDFC.
After seeing the numbers, have you recommended any of the smaller banks to your clients?
Smaller bank, I think so.
Smaller private sector.
Correct. So people are saying Dhanlakshmi Bank is a turnaround candidate, but we don't think
Which one have you recommended?
We still recommend RBL Bank, Bandhan Bank, and DCB are top 3 banks from a tactical point of view, and long-term secular investing, passive portfolio, HDFC and Kotak Bank.
Okay, is that something that you're also doing, Ritesh? Have you spoken? What have you told your clients after seeing the numbers?
See, if you look at the numbers, first we should give the credits to the RBI. In the recent past, RBI has taken a lot of corrective measures, wherein all the small banks and the private or other public sector banks and the larger banks have done a lot of corrective measures in the system from top to bottom, which increase the efficiency in terms of results and the numbers what we are looking at right now. But if you look at it overall long-term perspective, I think my bet will be on the larger bank because it is a more stable, diversified, and it is always be an investment bet in terms of stability. If you get into the smaller bank, in terms of diversification, it's having a limitation. And the way the competition have been created and the retail participation comes in place or other corporate participation comes in place, the larger bank has given a better return compared to the smaller bank. When it comes to comparison in terms of investment versus smaller versus larger, we have to see the price to book value and at the same time the P ratio also, which is far better than compared to the smaller bank. So my bet will be on the larger bank. In terms of recommendation, my bet will be continued on HDFC.
Okay, that's the view that's coming in on the banking front. The third stock we want to talk about is pretty much the stock of this month. It fell in 10%, more than 10% yesterday. It's managed to recover part of it today, and that is Zee Entertainment. It's trading up 7% in trade. What should one do in Zee? Because there's absolutely no clarity, because the promoter has been saying the same thing for months and months, but there's no clarity when the deal will happen. So Ritesh, what's your sense on Zee? Obviously your clients must have asked you what to do. Is it something that you would ask them to accumulate, or is it a total avoid now?
See, when there is no clarity, it is always be advisable to stay away from the counter. When it comes to the speculation, in terms of somebody would like to take a higher risk, they can definitely enter at this price. But when it comes to an investment, it is better to stay away. Let us wait and watch to getting a better clarity. Yesterday, management has given a clarity. It will take another 6 to 7 weeks in terms of stake sale and other aspect. So I think wait and watch will be a much better clarity from the investment point of view. But if we'll consider, if I wanted to invest into the long-term point of view at this point in time, definitely somebody can start accumulating by 20%. If you look at overall debt is around 17,000 crores, wherein the enterprise value comes to around 39,000 crores. If I deducted the debt, then too the worth of an organization is comes to around 23,000 crores. In terms of performance-wise, also revenue has fallen down, but in terms of profit margin, they have maintained a bit. Even in terms of advertising, revenue is also growing by 24%. And 27th of May, the Q4 result is also expected. So I think speculation point of view, somebody can take a bet, but in terms of long-term point of view, it is better to wait and watch.
Okay, Shahina, what have you told your clients on Zee?
I think it is highly risky, but I think the underlying assets definitely justify the current price level. The lenders are now talking, the lenders who hold 20% of the equity are now talking of doing parallel negotiation with, potential investors. So, I mean, that is a positive also and negative also, because now you have the management who is saying that they are doing something to, find a buyer. And then you have the lenders who are again now going to start parallel negotiation because of lack of clarity as to what is happening on the ground. So all this definitely puts in, in the focus a high risk, because if something doesn't fructify in the near term, then you will have a lot of selling coming in from the lenders. So to that extent, it's extremely risky. I personally have a very small quantity, so I wouldn't sell, because the potential is there if we have a very good name coming in.
Okay.
Then that prospect is there, but it could just lose another 15-20%, with the bat of an eyelid. So really, one wouldn't want to play with your investments like that.
Okay, what about you, Umesh? What have obviously you must have also gotten a lot of calls from clients asking what to do. What have you told them?
So the bargaining power of Subhash Chandra is very less, given that they have a debt overhang. There is a huge debt they have to repay. And when we think from business perspective, every buyer knows that this group is into trouble and they need to sell in a time-bound manner. So obviously the premium that Zee ought to have received, had they really sold in good times, will not be available. So from a trader's point of view, so they are betting on that open offer price will be around, but given that 6 months have already lapsed, so open offer price will be around less than 450. So there is not enough margin of safety, or that margin is not there in order for them to really take that bet. So ideally this is for an investor who thinks that if I'm buying for 5 years and I will not look at it what's happening. So I think that with that perspective one should buy. Otherwise, this is a very speculative stock. It can go up by 10%, it can go down by 10%. So from trading perspective, I think this is a clear no from trading perspective.
Okay, so clear no as far as trading is concerned. Obviously, risk will come in because the counter tends to move in 20-30% even in an intraday basis. So that doesn't. That's something that retail investors need to be careful about. And the final stock we want to talk about is we're in the midst of the earnings season. We asked our guests whether they found any stock which surprised them with the earnings. So Umesh, I'll start with you only. Any stock that that surprised you this time around with good earnings or bad earnings?
Ultratech.
Ultratech, okay.
Ultratech, I think they are creating a formidable moat in terms of the way the strategy they bought Binani, they bought Jayprakash Associate, and the beauty was they were really able to integrate and get synergies out of those acquisitions. Given the operating OPM that they have recorded, I think this is one of the highest in past 5-6 years, and with all the increased capacity that they have. So we think that in a commodity type of business, the largest player is the one who really benefits. And if India is a great economy for next 10 years, I think Ultratech is one stock, one business one needs to have in their portfolio. So this is business perspective. From all entire cement spec, I think Ultratech is the best. So from valuation perspective, there are so many other stocks that are available at far below that what currently Ultratech is trading. But I think that's how investing is all about. If you really want risk-adjusted return, I think Ultratech offers a very, very promising that reward. Obviously, any lower corrections, buying on dip will be much better. But from 10-year perspective, even from 5-year perspective, Ultratech will be a stock will deliver phenomenal return.
Okay, so Ultratech is the first stock. Shahina, any stock that you found surprising that came out with numbers and really surprised you?
I think the paper industry is doing pretty well.
Okay.
And JK, which came out with their numbers, in my view is a decent set of numbers. While the margins were slightly muted, but if you look at the overall revenue growth, if you look at the profit growth of almost 52% YOY, I think it showed a very good growth. Plus, what I was pleasantly happy to hear was that the new capacity addition at Sirpur has gone into trial production and will soon in the next couple of months come into production. If you look at valuations, the valuations are extremely attractive. Even in FY19 they've done almost about 25 rupees EPS. So I think even if you consider 15 to 20% growth over the next 1 year, I think valuations are attractive, and the best part about it is that the imports from China are extremely curtailed, as well as paper prices are moving up across the board. So I think for integrated players like JK Player as well as other paper companies, this is a good time to get into the sector.
Okay, paper sector is something, in JK Paper in particular. And Ritesh, finally, which stock which company did surprise you with numbers?
My strong bet will be on IT, and particularly in IT sector, I would like to recommend it on TCS. The way TCS declared the result, that is fantastic. And if you look at overall performance of the TCS from last almost 1 year compared with the previous year, it is fantastic. In IT segment, it is very much important in terms of products demand. When it comes to TCS, the product demand is very much high in the same peer groups. If you look at digitalization, in digital segment, TCS given a growth by 46%, which is fantastic. And it is not only in India, but also in UK and Europe. It is growing by 17% and 21% respectively. If you look at client addition, the additional client had been added more in Q4, which is going to give the result in FY19-20. So in terms of client addition also, it is fantastic. If you look at order book has also recorded in Q4 by $6.2 billion, which is also fantastic. If you look at the BFSI segment per se, the 30% of the revenue is coming from the BFSI segment. So segment specific also, there is a tremendous growth in terms of revenue wise. In terms of employee addition and the employee attrition numbers is also fantastic. So I feel overall structure of an organization is really good in terms of employee perspective and the client relationship point of view. Product demand is also very much high. You can consider they have lot of products, will be a monopoly in terms of BFSI segment. So long-term perspective, I think TCS is going to be a strong bet.
Okay, that's the view that's coming in among the stocks and the companies that surprised our guest with earnings was Ultratech, TCS as well as JK Paper. But with that, we completely timed out on this edition of Hot Money. Many thanks to all of my guests for coming in. Umesh, Shahina, Ritesh, thank you so much for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg.